Japan and the United States have officially confirmed a coordinated intervention in the foreign exchange market, the first such joint effort in 15 years. The move was aimed at supporting the Japanese yen after the currency tumbled to around 40-year lows against the US dollar, triggering concerns over inflation, import costs, and broader financial stability. Following the announcement, the yen strengthened sharply, rising by more than 1% to trade near 155 yen against the dollar, as investors welcomed the coordinated action. Japan's finance ministry said the intervention reflects close coordination with the United States, while US Treasury officials backed Tokyo's efforts to restore orderly market conditions. The last time the two countries jointly intervened in currency markets was in 2011, following the devastating earthquake and tsunami in Japan, when global authorities acted together to prevent excessive volatility in the yen. This time, the challenge is different. The yen has been under sustained pressure because of the wide interest rate gap between Japan and the United States. While the U.S. Federal Reserve has maintained relatively high borrowing costs, the Bank of Japan has kept interest rates much lower, encouraging investors to shift money into dollar-denominated assets. A weaker yen has made imports, particularly energy and food, far more expensive for Japanese households and businesses, adding to inflationary pressures at home. Japanese Finance Minister Satsuki Katayama and U.S. Treasury Secretary Scott Bessent indicated they remain prepared to take further action if excessive currency volatility continues. Markets are also increasingly betting that the Bank of Japan could raise interest rates again in the coming months to reinforce support for the currency. However, analysts caution that intervention alone may not permanently reverse the yen's weakness. Unless the gap between Japanese and U.S. interest rates narrows, structural pressure on the currency is likely to persist. The coordinated intervention nevertheless sends a strong message that both Tokyo and Washington are willing to act together to prevent disorderly currency movements and safeguard global financial stability. Financial markets will now closely watch the Bank of Japan's next policy meeting and any further signals from U.S. Treasury officials, as investors assess whether coordinated intervention can provide lasting support to the world's third most traded currency.
If you like this video, then like, share and subscribe to Mirror Now.